Parker Lewis. How you doing, man?
Good to be in Fort Worth, Texas.
Is
this your first time in Fort Worth?
Well, I've flown out of the airport.
Yeah, but that's like in the center of Dallas and Fort Worth, so it's technically in neither.
This is my first time I don't know anything about Fort Worth. I don't know what it is, what it means, what it stands for. We've literally come from the airport to here. It's a bit sketchy.
They call it Cowtown. There's a stockyard. They got a good rodeo here, but I think they still do it. They walk the cattle downtown every evening or night, where they like basically move the cattle from one stockyard to another.
We got to go see that.
Yeah, we do. I think we're close to Stockyard.
Really?
Yeah,
I think so.
Yeah, I mean, I don't know anything about this place.
It's a nice town.
I like Dallas and I like Austin.
Yeah.
We're only here for the Texas Bitcoin Summit.
Nice.
We had Lee on yesterday. I kept referring it to this Texas Bitcoin Summit.
Well, just got to change the name formally.
Got to change the name. How are you, man? How's Zaprite you were working on last time I saw you?
Yeah. I'm at the last stage. The book's at the printers, so Gradually and Suddenly's at the printers, and been working on Zaprite for the past few months, and we'll be going forward. Focus on, kind of like think about it, Unchained, focused on custody, and then didn't really have a revelation, but just over the course of the last year and a lot of what's happened in the banking system just brought to the forefront the need and importance of focusing on Bitcoin payments, not as a novelty, but as a critical rail.
So I've had a challenge with payments recently that you're probably going to just tell me that Zaprite solves. I used to use Blue Wallet, and the thing I liked about Blue Wallet is I could have multiple sub-accounts, right? And so I've got my football club. We take payments on site when you buy your beers or your burgers. We take payments online, and we have people send donations. I've got What Bitcoin Did, where I get paid in Bitcoin. And we've now got our event where we get paid in Bitcoin by some people. And I now have 3 different Lightning wallets for 3 different reasons to send money to one of my business, right? And so like I was thinking, I needed one place to have it all. And I used to be able to do that on Blue Wallet. But you can't, you have to have you have to actually have the Lightning node set up to do it, which I haven't done. And I was okay being I was okay using a custodial wallet for it because we'd always sweep at the end of each month anyway. But like, I don't have that. Are you going to tell me Zaprite does this?
I'm going to tell you that Zaprite will help solve that problem.
Right, okay.
But that really what we're focused on is creating a more seamless payment experience for someone like your advertisers, where you can invoice them, or a better experience selling tickets at the game, and then being able to connect in multiple wallets so you can kind of have one account where funds go to different Lightning wallets or accounts or different XPubs if you want to receive on-chain payments. So kind of helping to, and then also to allow fiat payments side by side with Bitcoin, because that's how we think is a critical way that people will actually adopt Bitcoin payments, is creating this unified experience between paying in dollars and paying in Bitcoin.
It is interesting because previously using Bitcoin was a novelty. I would only pay because it's like, oh, I'm a Bitcoin, I should spend some Bitcoin. But there are definitely lots of instances now where I find I prefer it. It's better. It's easier. I particularly liked it down in El Salvador when I used to go down there because I didn't have to exchange dollars at the airport. I could just turn up in El Zonte everywhere except in Bitcoin. It was like life was easier. But there's certain payments now, like international payments, I still have massive difficulties with getting through. The amount of information I have to give to the banks, and sometimes they say, no, that person can't pay you.
Yeah, I mean, also particularly large transactions, and I've gone through this with my book. I commissioned a painting for an artist in a different part of the world, works under a pseudonym, don't ever know the full name, and paying him in Bitcoin, seamless. He issued me a Zaprite invoice. I paid it on chain. It was enough money. But then for my designer, it was a comparable amount of money, and I tried to pay 4 different ways with fiat. And because initially it was, basically paying, almost $2,000 in, on a Stripe card. You're like thinking about the fees, and also they wanted to, connect to your bank account. Then when I asked to, send via Zelle, there was a limit of $1,000.
Yeah.
ultimately was able to then get a Venmo account and pay, Venmo. But like in certain instances, it reduces a lot of friction. Really, what set me down on the path though was that I think that we're going to shift to a world a lot sooner than people think, where Bitcoin as a rail for payments are going to be something that becomes more critical and on a faster timeline. And it's not like it's necessarily tomorrow, but it's one of those scenarios where you have to prepare, because if you don't and then you're forced to after the fact, it's a lot more chaotic. And the thing that accelerated my thinking around it was really the bank failures in the US earlier this year, where it's like, yes, fundamentally, and I just experienced this myself, it was easier to pay a guy in another country over Bitcoin than it was to pay someone in my same country in dollars. That's kind of an edge case. But going forward, if we think about banks as counterparty risk and a potential source of failure of your savings, and that's one of the reasons to hold Bitcoin, it's also a single point of failure of how you receive, or most people receive, revenue. And it's a single point of failure because if your bank failed, it's also like, well, if that's where all the money was being routed to send all your funds, well, now you have a problem like at present. And also, you go set up another bank account for a business. It's hard. It takes time, weeks, sometimes months. So go set up a Bitcoin wallet and connect a Lightning address if you have one, and you can receive Bitcoin payments far more seamlessly. So
yeah, this kind of like reminds me of why I kind of have a bit of an issue with like CBDCs, because not only, if you forget all the dystopian surveillance bullshit, the kind of the way payments work now is we kind of have a decentralized system at the moment, in that one of my banks, I've got a MasterCard, one I've got Visa, I also have an American Express credit card, I also have cash, and I have Bitcoin, right? And so if my bank, Revolut, fails and I can't use my card, my Revolut card, I can still pay someone with my credit card, or I can still pay cash, or if they accept Bitcoin. I've kind of got this kind of like network of things I can fall back on. But my understanding of a CBDC, if that network fails, everything will fail. Like every payment channel and every traditional payment rail will fail.
Yeah, I mean, I really think about it as, functionally, we already have, speak in the context of the dollar, we already have a digital dollar. If the Fed system fails, if Fed clearing goes down, the banks are functionally at a standstill. I think I saw a week or two ago, there was an ACH bug that was down for a period of time. So I think what you're keying in on, which I think continues to be the case in a CBDC world, is that there's a single point of failure, but there's already a single point of failure, and it's already built on top of software. And so I don't think that is functionally different. I also think that because we have a Fed dollar and it is ultimately centralized and it is already digital, that the concern about a CBDC is like, we've got our answer. It's just marginally worse than what's already really bad. And if you think about what that could represent to how bad the current system is, it's like, well, just focus your energy. Like I think basically a lot of the concern over CBDCs will ultimately turn out to be, I don't want to say a LARP, but it's just like it's focusing energy in the wrong place. It's like the system is already broken. We know the system is broken. Don't focus on fighting CBDCs. It's very costless to a politician to say I'm against CBDCs. It's more costly to a politician to say this whole system is broken and I need to support Bitcoin, because the only way we're getting out of this debt problem, central point of failure, surveillance, censorship is with a form of money that isn't centralized.
So do you think we haven't majored enough on payments when we talk about Bitcoin? Because we'll often talk about 21 billion. I mean, you know how much you focus on that. And we talk about censorship resistance. We talk about the decentralized nature of the network and all the benefits it has to people. But we never really talk about I don't really often hear people talk about a system that won't go down.
Yeah, I mean, I do think that is a critical piece. I my focus on it has been heightened because of the fragility. It's like that has always been the case. I think that resilient system that isn't just a single point of failure in terms of not relying on a bank, but a redundant system that doesn't go down, I think is probably a side of the Bitcoin payment narrative that is underexposed, or like that people don't value enough. But starting from the point of, I have to have a problem or a perceived risk in order to create a solution. And so one of the things that I talked about in a presentation I gave at Old Parkland was that idea that, and this was in Dallas, just across the Metroplex here in DFW, but it was, if you're looking at Bitcoin from a savings perspective and you think that it's blockchain tech, or you think that it's crypto, and you haven't first identified that it's solving a problem, then you look at Bitcoin from a balance sheet perspective or from a savings perspective as a problem in search of a solution. Or sorry, a solution in search of a problem. Same thing applies to payments. If you look at it and say, well, my credit card payments work just fine, Bitcoin payment seems like a novelty, and there actually seems to be more friction involved, then it's the same way where you're perceiving it as, a solution in search of a problem. In my view, kind of what you're keying in on, both in terms of its, uptime, elimination of a single point of failure, not just in the context of me sending a payment, but as a network as a whole, that it is solving the same problem. And I do believe it's like, and one of the things I talk about in a couple of the pieces that I've released on payments is that it starts with the same thing. It starts with the 21 million. Like, I don't think Bitcoiners should be going around telling people who don't understand Bitcoin that they need to receive Bitcoin payments, because you will never get to the point of seeing how Bitcoin payments solve a problem if you haven't figured out why Bitcoin solves a problem. But if the currency itself is a risk, and it's certainly a long-term risk, the way that I weight it is a much more near-term risk than others might, the rails of that system are also a risk. And so my motivation is saying it's not that we shouldn't keep talking about 21 million. That's critical to the people who don't yet understand Bitcoin. It's like, you first have to get to that 21 million, understand its relevance, because if you get there, then the logic to seeing why Bitcoin payments similarly solve a problem it's a solution to the same problem. The logical kind of decision is the identical one. It's like, if you've come to the idea that Bitcoin will save wealth better, store purchasing power, then receiving Bitcoin payments is just a more efficient way to get it. Right. If you have not yet gotten to that point of Bitcoin stores purchasing power because there will only ever be 21 million, then someone over here telling you that, Bitcoin payments will do something for you, it's actually easier to understand the 21 million, and getting to payments it's a one and then the other. Right.
So there's essentially two components of that then, because you mentioned earlier the banking failures. The banking system failures means people are cut off potentially from receiving and sending money at a certain time, and that's happened in other instances where banks have chosen to cut people off. We saw that with the trucker protests, where people were cut off from their bank accounts. They couldn't withdraw money, they couldn't make mortgage payments. So there is the being cut off, or the system breaking itself, but also there is that efficiency side of things. So you mentioned the speed of getting a bank account. We're launching an event next year. We announce it. We want to receive payments. It has to be digital. People aren't coming to Bedford to give me cash. And so to register a bank account, I first have to phone up my accountant. She has to register the business. Once the business is registered, I have to get all the registration documents. Then I apply for a bank account. I have to provide the registration documents. I have to go through all this KYC back and forth. It didn't take about a week. Whereas if it was Bitcoin, I was like, here's an address.
Yeah, and that's a good case.
Yeah.
Honestly, I've had instances where setting up bank accounts for businesses takes 6 weeks.
I think it's worse out here.
Yeah, and very well might be. But the other side of it is and I just went through this process setting up a bank account for my for Gradually and Suddenly, the book, to do all of kind of route everything through there, and I have that similar problem. So it's a similar pain point that I have, where it's like I've got a partnership, a an entity for graduates, and suddenly Zaprite as an entity itself. But that when you set up a bank account, also read the bank account agreement. People who haven't opened a bank account in a long time, check the box. Now, once people are mindful of Bitcoin, you actually read like the 30 pages of a bank account agreement, and a Bitcoin address starts to make a lot more sense. Because part of it is the speed. The other part of it is just, you're basically signing away your entire life and, blood money to say like, okay, I do all these things. It's your money. If for whatever reason you don't want to give it back to me, that, I'm signing away that, or, there's 1,000 things that could go wrong. And all for the reason of receiving a fiat money that's losing purchasing power at an accelerating rate, and it's still a necessary part, but the system as a whole is at, to me, a breaking point. And I don't like to predict things a week, a year, but when you're thinking about building a business and you're thinking about what happens in a year or 2 years or 3 years or 5, it's like you have to prepare for those timeframes. And if you're not set up to have a redundancy, then you have another single point of failure and you didn't realize it.
Right. So where Bitcoin is insurance at an individual level for currency failure, Bitcoin payments is an insurance policy for operations of a business.
Yeah, absolutely. Like think about this. So when Silicon Valley Bank failed,
Yeah.
and that Silicon Valley Bank failed in March. And most people, because of the 24-hour crisis-driven news cycle, that's like 15 crises ago. Maybe it's 10, maybe it's 8. I don't know. But it's like there were 3 or 4 massive U.S. banking failures. Silicon Valley Bank was the first to go, and it went the most swiftly. Like people didn't know there was a problem. 11 a.m. the next day, FDIC takes it over on a Friday. Then you have a bunch of, really wealthy billionaires in Silicon Valley, technocrats out there saying, we got to bail out the depositors of Silicon Valley Bank. It's a $160 billion bank. And there's a lot of businesses that banked, a lot of Silicon Valley startups that banked. There were, other companies that ran their commercial accounts through Silicon Valley Bank. And between Friday and Monday, when all of these really wealthy people were hammering for bailouts because Silicon Valley Bank banked a lot of really wealthy people, one of the very valid concerns of the businesses that were banking with Silicon Valley Bank was, how am I going to make payroll?
Yeah.
Right? And that is 100% a valid, most immediate concern. It's the balance sheet. When I have my savings there, that's the 21 million. That's the hold your own keys. Like I never have to wake up, having my Bitcoin in Unchained Vault when Celsius fails, FTX fails, BlockFi fails, Silicon Valley Bank fails. My money's good, and I don't have to worry about if anything ever happened to Unchained. I'm good. That gives me a lot of sleep at night, comfort. But that next immediate problem is, well, if you were a Silicon Valley bank account holder and that's where all your money was saved, that's also where all your receipts and revenue was being routed to. So all the way that you had financial pipes was going to that same bank. Now, a lot of businesses have multiple bank accounts, but many businesses don't. The vast majority of them do not. And most individuals have a single primary bank account if they're being paid as a contractor. And so it's like the first thing is, how do I make payroll? The next step is, well, shit, that's the past. What about the future? I need to continually receive revenue to be able to make future payroll, to sustain savings in my balance sheet without just being bled out, or to be able to pay vendors, right? Revenue in, expenses out. And so it's like the first immediate thing is payroll, but the revenue side and the receipts, it's the same thing. And it's that if that bank failed that precipitously, that's a balance sheet problem, your savings, but it's also a rail problem. And if the dollar as a currency system is a risk, and the rails of the system, the payment rails are a risk. And if Bitcoin is the solution to saving and purchasing power, then it is also the solution to the payment rail problem. And it's just that when people are sitting there looking at the number on the screen and number go up, it's really the Bitcoiners that I'm out there advocating for to say like, hey, like if not you, then who? Like the person who doesn't get Bitcoin is not going to be the person that steps through, a few hoops to receive Bitcoin payments. But if you understand that this is a problem, you should more easily recognize that the payment side of it is a more near-term kind of solution to the fragility of that legacy system.
And look, we're set up for that already. I have to have bank accounts for my businesses because Bitcoin's too volatile to operate in just on a Bitcoin standard. If I'd started every one of those businesses at the bottom of a market, fine. We would have survived. It would have been fine. But we have to have pounds. Actually, you have to have dollars at times, and it's just the reality of business. But if these systems fail and completely fail, if my bank fails and I've got to make payroll, I phone up Danny and say, listen, the bank's failed. I can pay you in Bitcoin. Danny's like, yeah, cool. I'll take Bitcoin. Ben's the same. Pretty much everyone who works with me is the same. We're already set up. We already have a treasury. We already have the technology. We already understand it through the whole company. But you will have companies who will have bank accounts with Silicon Valley. With Silicon Valley Bank, you go say to them, oh, you should probably have this insurance of having Bitcoin payment rails. They still probably won't convert, even though they've been through it.
Yeah, I mean, well, and that was something else that I talked about in this Bitcoin is not a hedge presentation that it's related to, at least, that one of the biggest, or not biggest, the most common question I've gotten from people that are kind of on the periphery looking at Bitcoin but don't yet understand it is inflation's been running rampant for the last year and a half. Bitcoin's been going down. I've heard that Bitcoin's a hedge to inflation. Why is it not hedging inflation? And that my explanation for that is that except that very few people have any material exposure to Bitcoin yet today, fewer probably understand it at an intuitive level. And if you accept that number's something less than 1%, by definition, Bitcoin's not a flight to safety. In the sense that if so few people own it, you can't flee to the safety of something that you do not understand. You first had to acquire some knowledge sometime in the past, then connect something that happens in the present. So that could be, I listened to a What Bitcoin Did podcast, I read a book, and then the Canadian truckers get cut off, and this idea of censorship-resistant money makes sense. But if you didn't have knowledge of Bitcoin, then when the Canadian truckers get cut off, there's no way that you could possibly associate Bitcoin as a solution to that problem, or that that's a problem that you might share at some point in the future. Same thing with inflation. If you're experiencing food at the grocery store being massively expensive and you've never learn the fundamental side of Bitcoin and you just thought about it as crypto bros and it reasonably, appears as snake oil because the people on CNBC lump it together, you're not going to associate the food at the grocery store costing more as a problem that Bitcoin can help solve. So you have to acquire the knowledge in the past that then as data points come in the present to connect it to it, and then to dictate how you change your behavior in the future or in the present going into the future. The same thing as one of payments, right? On the Bitcoin side, that if you do not understand why Bitcoin solves a purchasing power problem in the 21 million, then you're not in a position to then understand, hey, when this, entity like Silicon Valley Bank fails and that throws a bunch of people at risk in terms of personal savings, a bunch of businesses at risk. Does Bitcoin solve the same problem? If you haven't, thought about these problems, about how, in the immediate term, because I agree with you, like even for my book, for Graduate Suddenly, I need a bank account because if I'm out there you have a podcast that's, capturing people, bringing them into Bitcoin. Same thing for my book. If I want to sell a book to a market of people who don't yet understand Bitcoin, they don't have Bitcoin. So I need to be able to receive dollars. Mm-hmm. But at the same time, the people who have already figured it out at this point in the present that fiat currency is a problem, and then the next logical extension, which I don't think as many people make, is that the payment side is not just a cross-border novelty. It's that no, the fragility of that legacy system if you just associate it with the currency itself without associating it with the rails, you're not thinking at the right level. And so I think it's just one of those things where it's like, hey, it's not solving a novelty problem, it's solving a critical problem. It's just that you can't wait till it's front and center. Like you can't wait till hyperinflation to save in Bitcoin or you're lost. It's like you can't wait to think about this problem of creating a redundancy in the present to augment fiat rails. If you wait to the point where those rails are no longer working, you're similarly lost and you've waited too long.
So understand the 21 million, then you can understand everything.
Yeah.
Because if you understand the 21 million, you understand why everything else can break. And if you understand why Bitcoin is unbreakable, then you understand why you need both the personal and business insurance.
Yeah. And also it's the same logic, right? If you started your journey, and it typically starts on a personal level, I figured out why Bitcoin stores purchasing power. If you run a business, you're sitting looking at cash in the bank. And even if you set aside the rails problem and the censorship problem, you're like, well, I have cash there that's losing its value.
Yeah.
And if I need this for my personal level, I need it for my business over the long term. And that doesn't mean that suddenly the fiat system and fiat expenses go away. So I still need that. But that's the balance sheet side of a business. So personal side, I've got a savings problem. The 21 million fixed supply solves it for me. Oh, if it solves it for me as an individual, it solves it for me as a business. Then the next logical step is, well, is Bitcoin going to store value any better or any less for me if I receive fiat and convert it to Bitcoin, or just receive Bitcoin directly? And that if you've gotten to the point that Bitcoin will store purchasing power, because it's the same logic, you will say, well, if it's cheaper, if I can get more Bitcoin by receiving payments rather than introducing, if I actually want the Bitcoin, if I introduce an entirely different currency system that has friction and cost, and I'm going to get less Bitcoin, then it would make sense to me to acquire the Bitcoin in the most efficient way possible, at the same time reducing a risk or building in a redundancy of payment rail.
It's so interesting because you say that at a time whereby historically I don't really keep pounds in my bank account. I keep enough for the next month and then a bit of a rainy day. Anything else just goes into Bitcoin. Because what else am I going to spend?
But
it
you
on?
would never consciously do that if you hadn't figured out why over the long term Bitcoin stores value.
Yeah, no, of course, yeah. But I hadn't made the same connection with my business in that what I tended to do is like, oh, we've made a bit of profit here. Staff get a bonus and take a dividend and enjoy it. But I did recently in one of my businesses, my accountant was saying like, this is the profit you're going to make at the end of the year, and I was like, I don't really want to pay a dividend. I've got nothing I want to spend it on. Can I just leave it in the business? She said, yeah. And I was like, yeah, but it's the melting ice cube, right?
Yeah.
And this is just a bar. It doesn't have a treasury. But I was like, hold on, this place needs a treasury now because I don't want to keep pounds in the bank because one, it's a risk of being lost. Two, it's a risk of melting away.
Yeah, and if again, it's like that is the fundamental side, and it's like that personal problem extends directly to a business. It's like it's not the same exact problem, but it's a direct logical fundamental extension, and that if you kind of the way I kind of visualize it, and I had it in the article that I wrote, kind of the someone is going next logic as to why the next business and the next and the next until every business adopts Bitcoin payments is that. If I think about it, it's like I have goods and services. I could either, pit stop in the fiat system and there's costs associated there and then convert it to Bitcoin. So, currently, at Zaprite, when we take, because we accept fiat side by side with Bitcoin on a $25 monthly subscription, about 4% of that goes to the fiat payment rails. And then if we wanted to get that into Bitcoin, we're looking at, now we wouldn't do it on a single transaction, but let's just use on a higher volume transaction somewhere between, 0.5% and 1%. So dollar for dollar, quote, if we were to just directly take the Bitcoin payment and eliminate the currency system as a source of friction, if we want the Bitcoin, we would end up with 5% more Bitcoin. So once you get to the point of I want Bitcoin and I have the same problem in my business and the treasury, because ultimately anything outside of that same working capital dilemma that you have on the personal side, I need to be able to pay my employees 6 months from now, a year from now, 18 months from now. I have a melting ice cube. Okay, I need Bitcoin. Well, if you want the Bitcoin, does it make logical sense to introduce, and you have somebody willing to pay you in Bitcoin, does it make sense to introduce an entirely different currency system in the middle of that, because you will only get less of it at the end of the day?
The biggest challenge in there was back in 2021, we had a sponsor come to us and they said, I want to renew, and we agreed a 3-year deal at a good price if they paid the whole 3 years in advance in Bitcoin, which they did. And Bitcoin was like 43,000 at that point. And during that period, Bitcoin went down to 15,000, and the pound was inflating. The pound was inflating away as well. So wherever I put the money, I was losing in that scenario. Now, look, I haven't had to tap into that Bitcoin, which is great. It's nearly back to even. But that's the challenge. It's that balance. It's that constant balance of what I'm going to keep in pounds, what I'm going to keep in Bitcoin, and over what time periods. Because it is a game. I know, look, I have the full confidence that anything I put in Bitcoin at some point will come good. Even if it's bottom, like top of the market, eventually that top gets beat again. And it's great if I don't have to touch that Bitcoin during that period. But if I'd had to, that would have been a disappointing scenario. And it is a balancing game that you come to learn and accept, and you play as a Bitcoiner, but it is a challenge.
It is. And like if you scroll down, Danny, there's a part of this article where I talk about it. The same applies to Bitcoin payments. It's where it's like, but how could a business accept Bitcoin as payment when it is so volatile? And the logical point is that like that dilemma is the same dilemma that you've already rationalized as an individual to save in Bitcoin.
Yeah.
Right. So if you were an individual and you decided to, buy a bunch of Bitcoin when it was at 40,000, you would have had to, or if you didn't, you're going to touch the hot stove and get burned and not do it again. You already at an individual and personal level had to rationalize Bitcoin's ability to store value while it is very volatile, and it's the direct extension to a business. So
if there is a slight difference,
well, no,
I've employee dependence.
No, but my point is it's not identical. It's a direct extension.
Yeah.
So if you've already rationalized why saving in Bitcoin on a personal level, despite its volatility, it's the same problem. Now you might need to deal with it differently in the business. Like you might say, hey, on a personal basis, I'm just going to have 1 month. And if Bitcoin goes down, like 1 month of fiat working capital or 2 months, I personally think that's low. I'd recommend having a little bit more than that in the rainy day. But if you got there, then you might look at your business and you might say, I need to have at least 6 months. Because in my personal context, if Bitcoin goes down and I was planning to sell it to buy a house, well, I'll just defer, buying the house until the next adoption wave. Like that's in your personal. You might not have that same timeline in the business. Bitcoin goes down. I need to continue to pay my employees. I've got costs related to soccer club, football.
Well done.
But it just changes the time horizon. Yeah. It's the direct extension of the same problem. You have different challenges in running a business and different things in your control in your personal context that are less in your control potentially in a business, and certainly payroll is a key one of them. But that problem's the same. So if you've already rationalized to yourself why, despite all that volatility, it works over here in my personal context, it's the direct extension. I just have to think about that volatility for the same reason I do as an individual. I just might need to account for 20% of my treasury in Bitcoin or 40% rather than 97%.
So what you're really saying is, if you're a Bitcoiner and you run or operate a business, your business should be a Bitcoiner really as well.
If you're behaving rationally,
Yeah,
and
if you're behaving
logically.
rationally, yeah. And I would say, in fairness, that I probably operate as an individual more as a Bitcoiner than the business. The businesses are, but I'd say as
Now-
an individual, I'm much more of a Bitcoiner. As me.
Now, but I don't define Bitcoiner as like 98% of my savings as an
It's not
individual.
even that. It's more like, for example, me and Danny are always making bets, whether we're playing table tennis or it's football. We never make bets in pounds anymore. It's always 1 million sats, 500,000 sats, 100,000 sats.
Well, we have a million sat bet, by the way.
It's an over bet I lost.
Yes.
We'll come back to that. Fucker. But it's always, and I think anyone in Bitcoin, it's just, it is just in sats. When anyone comes to the football club who's a Bitcoiner, they just want to pay in Bitcoin. Whenever I go anywhere and they accept Bitcoin, I just kind of want to pay in Bitcoin. I much prefer to get paid in Bitcoin by sponsors. Like, I'm just there naturally in my head thinking about it like that. But my fundamental, like the pillars of my life are now Bitcoin based. When I bought my house, I based it on Bitcoin calculations. But I'm not doing the same with the business. Like, people can pay me, but I'm not. I'm still a little bit trapped more in the fiat world of business.
I don't think
It's
that
a
you're.
fear thing.
I don't think that you're. I wouldn't. Well, and that might be a psychological thing. I think that it's more a reality of that there are different challenges, and that running a business is complicated and hard. There's more considerations, and
It's fair.
and well,
I'm willing to take more risk as an individual.
well, but when you say, I mean, you're taking risks to your business. You're
I know.
Because I think that people that, again, Bitcoin's volatile. I like to say Bitcoin is volatile but not risky. That endeavoring to have a Bitcoin podcast, that's the risk-taking endeavor.
Yeah.
Endeavoring to have a soccer club, football. Sorry, I'm not doing this on purpose.
No, that's fine.
I grew up playing soccer.
I accept it.
It's hardwired.
We're in your country.
Having that club, that's a risk-taking endeavor, right? We're talking about how you secure the savings that are in that entity to protect against future uncertainty. And that the nature of a business, like, are you going to cut off your nose to spite your face because your customers, many of them are not Bitcoiners and they want to go see a football game and pay you in dollars? No, you're going to take the dollars, so it's like, you're not going to cut off your nose to spite your face. But that, and I, similarly got this question at the Old Parkland event in Dallas a couple weeks ago, which was talking about institutions. When will institutions adopt Bitcoin? And if you think about the logical progression, it's easier to adopt Bitcoin as an individual because coming to that realization that Bitcoin will store purchasing power over time, the importance of the fixed supply, the credibility of the fixed supply, while all the other nonsense in crypto is snake oil and not relevant, actually probably negative, that's a personal journey. Now imagine a board of a endowment or a company. If 1% of people in the world, I say max, understand Bitcoin at the level of it intuitively being money, then how are you going to get a majority?
You have to be a Michael Saylor.
You have to be a Michael Saylor.
Yeah.
It's possible, but it's really improbable. It's easier for an individual to make an individual decision that just impacts them. And then if you were thinking about, say, an endowment for a university and there's 15 people on the board, you don't just have to get 8. You probably got to get 12 or 13 to, because if it's, just teetering on 50%, you need probably an overwhelming consensus to take an action like that. And so when you kind of extend that world over to a business, it's that you're dealing with more people than just one. It's not just you in a savings capacity. You're operating a business. You have, expenses. The fiat rails are not magically, not critical in this present day. And so I think about it as just like, the risk that you're taking is the business endeavor. And then the de-risking of it is a combination of holding a percentage of Bitcoin, because in that context, it's just like, well, I need to have less Bitcoin over here because I got more money coming in and out, more people depending on me. I'm okay if something, goes wrong over here, but I'm not going to be okay if I let these 10 individuals down, right? But Bitcoin is still solving the same problem. You just have to approach it less. Maybe storing 5% of my treasury in Bitcoin, or 10% or 20%, enabling the ability to receive Bitcoin payments, but I'm not accepting fiat payments. Both of those two sides of the equation are fundamentally the same. You just approach solving the problem a little bit differently because you're just yourself and you're happy to deal with those consequences versus being in a business context, in my opinion.
I think the timing is really important too. Like now is a much easier time to adopt Bitcoin as a business than at 20K in 2017 or at 69K in 2021. Like the likelihood is you're going to build yourself a bit of a buffer over the next few years. So if there's a time to do it as a business, it's probably right now.
Yeah, I think that's technically correct. It's certainly easier psychologically to make this decision and to do it where you think you're at a quote local low. I think that fundamentally it is, it would be better to buy Bitcoin, at 20K than 69K. And I think that most people who are adopting Bitcoin for the first time, they have this inherent fear of I'm buying Bitcoin at 69K, and that naturally extends to the business saying, if I'm receiving Bitcoin as payment, I'm fearful that I'm doing it at the exact wrong time. Now, the reality is if you've done it in what I would say is the most rational and logical order, you've first gotten well down the side of why Bitcoin will store value for the long term, and you're less worried about that short term because now I think it certainly makes it easier. But where I would distinguish it is I view it as a de-risking of a business rather than more of an offensive play. Similarly to how I view saving in Bitcoin, because most people would look at me and say I'm crazy for having 95 to 99% of all of my savings in Bitcoin. Prior to Bitcoin, I was incredibly conservative, and I continue to think that. I just figured out why this is the most conservative position to take, saving in a form of money that can't be printed. And so if that clicked for you, that Bitcoin stores purchasing power, and then you're a year or two down your journey and you're like, hey, I have this business and I have the melting ice cube and I have this single point of failure of my payment rails and the credit card fees are taking 4%. Whether Bitcoin's at 69K or Bitcoin's at 20K, I'm going to build the redundancy, reduce another large uncertainty in my business. And if I turn on the ability to get paid in Bitcoin, like the world's not just going to flip and be like, you have 80% of your receipts in Bitcoin. Just as you might start saving gradually 1%, then 2%, and then one day you find yourself up 99%, you unlock the ability for your customers to pay you in Bitcoin. It might be 1%, 2%. Now, if you're in one of our businesses, that skew might be higher. But if you're, like I got a dentist set up to receive Bitcoin as payment, 99 of 100 of his customers are probably still paying fiat. So if 1% of your revenue, which is a part of your profit, which is adding to your savings or your balance sheet, your cash position, it's ultimately not impacting the volatility. It might be psychologically difficult to say like, oh, that 1% of my revenue is down 20% because I started accepting Bitcoin at the wrong time. But if you're doing it in the logical, rational order, you've already figured out why that will course correct, and it essentially becomes a DCA. It's like, okay.
Yeah, so that's exactly what I was thinking. It's a DCA, but it's the interesting thing about it as well is that it's the last money you spend. So the football club's a great example because we take about 10% of our payments in Bitcoin. That's tickets, burgers, sponsorships. All of it goes straight into our Unchained wallet, into our Unchained vault. Done, locked up. Every month when I do my accounts, I do my fiat accounts and I do my Bitcoin accounts, and we have how much money's in that, how much money's in here, and then we have like a total, and we have to have the value of Bitcoin at the time, yada yada. But during the month, whenever we're making payments, we're making all of our payments in fiat.
Yeah.
I mean, look, if some
Because
we did
the
one.
the vast majority of your payments are probably still coming in fiat.
Yeah, we did one. Like we got these little, the little hodlers. We've got a Railbird for the little hodler. They wanted paying in Bitcoin, and it made more sense because they're in another country. I wish I hadn't now because Bitcoin's gone up, so they've got more expensive. But the point, actually, now I think about that, I'm probably losing money on those.
Well, that's spend and replace.
But you're thinking in a dollar pound world.
What I'm saying is that whenever I'm making payments, I never think of spending that Bitcoin. And, that has been a DCA. And actually, we're up on all our payments received because we put that into a separate vault. And we're probably never, I can't see any scenario where we spend that. And so that just becomes like I don't know, we have melting ice cubes. What would we have? A freezing puddle of water. It is that hardening rock of money that we keep, and it just sits there forever. So that 1% the dentist does, it might go down, or it might come back up. But the point being is like, it's a hard buffer.
It's the last, like you said, it's the last dollar spent.
Last dollar spent.
The last sat spent.
Yeah.
And so I do think that because a lot of businesses, and again, like, this message that I'm carrying is to Bitcoiners, not to people that do not understand Bitcoin. I think that it's like set up for disappointment and more pain than is worth to try to like preach a story about like, hey, if you turn on Bitcoin payments, you're going to get a lot more revenue. No, it's a balance sheet problem. It's a balance sheet solution, and it's one of Rails. And that if you think about that kind of decision point in the context of a balance sheet problem and a Rail problem, then as they're DCAing, they're kind of extending the way they think about it in their personal context. And if you turn it on and it's 1% and 2% and it gets to be 10%, you can also go the reverse, because all these people are set up to be able to buy and sell Bitcoin. So I think that a lot of times people are thinking about it as like, well, what if I sell something for quote $25 equivalent in sats and that transaction goes down? It's like, no, you're not managing your treasury or even your accounting on a per transaction level. Typically your receipts for this item, what did I actually receipts, currency gain loss in aggregate, not on a day, but on a month or a year. And so it's like, it's actually, well, this is going into treasury, and then I'm deciding, what percentage of my treasury should be in Bitcoin or not, because all this represents is for every dollar I receive, quote, I'm getting, in my context on the Zaprite side, if I took a monthly subscription and wanted to get it into Bitcoin, if I were to just receive the Bitcoin, I'd have 5% more, such that if I wanted to sell it and get dollars, I'd charge, I'd incur the 5 or 0.5% to 1% fee and still work out better. Now, I wouldn't be doing it with that logic, but I'd say, hey, if the percentage that was paid in Bitcoin was too high to not cover dollar costs, well, in one transaction, once a month, I can sell some Bitcoin out of the treasury to get my balance sheet right between fiat and Bitcoin. It's kind of like this mental break where like people think about the complexity on a single transaction rather than I'm managing savings for my business, my cash position, and what should be in Bitcoin versus what should be in fiat. And if I actually want the Bitcoin, how am I going to get it most efficiently? While, again, the way I think about it is what got me set down this path was reducing a long-term risk, because it might start off 1%, it might start off 2%. There's a chance that the Bitcoiners in your keymunity might start supporting you more than they did, but I don't think that that's the solution we're talking about. But the kind of keying in on that like individual transaction level, it's like it's too granular level to think about the problem. And if you extend it out to your overall operations, like you can get in and out, and you don't need to be selling every $25 transaction you have. So I think it's actually a lot simpler decision if people start from this is actually solving a problem for my business, creating a redundancy, reducing a risk, and I can go in and out the reverse side if I need to.
Can I challenge you on your Bitcoin is not a hedge?
Yeah.
What is the TLDR of the thesis?
There's two ends of the knowledge spectrum. There's a zero state where you do not understand Bitcoin. And I put it to the point of like something about Bitcoin, it hasn't clicked. It doesn't mean that, and to like go into like the graduate and suddenly it's like the way that I it's true for my case. A lot of people that I've talked to has been similar to them. They're kind of learning about Bitcoin. They're open to the idea, but it just doesn't make sense. And then they listen to a certain podcast, someone said something in a certain way, or they read a book and it was written in a certain way and an idea clicks. Maybe they connect that to the Canadian truckers or Russia getting cutoffs from SWIFT. They put information together and Bitcoin becomes possible in their mind. They start to order it as money. That from there, like the picture isn't in focus, but something is clicked to not just say there's a low probability that I can't explain. I've just been able for the first time to order or make sense of how this actually could be money. Then from there, you start going down a deep rabbit hole, and it's inevitable that you get to the point of seeing like Bitcoin's the best form of money and you become super convicted in it. That from that point of like something clicking, if you are on the left side of the spectrum, you inherently, even if you're like, I'm going to take a bet on Bitcoin and it's going to be 1% of my savings, you have no logical or rational basis to explain the world around you. So when Bitcoin crashes to 16K, you have no real basis to know whether it's going back up or whether people are going to adopt Bitcoin as money. So my point is that if you have not gotten to that point of Bitcoin clicking, Bitcoin cannot functionally be a hedge to inflation. That if you are at the zero state or on the left side of the point of your journey for something having clicked, it can't be a hedge because you're not equipped with a proper fundamental knowledge to not make a terrible decision.
And so hold on. So you're just, sorry to interrupt. You're saying it can't be a hedge if you don't understand Bitcoin, but if you understand Bitcoin, it can be a hedge.
No.
Oh.
Then once it clicks, you can't exist in this in-between period, because once Bitcoin clicks and you start to order it as money, you recognize in a fairly quick way that it's the solution to inflation. And that there's something very different from something being a hedge to inflation and something being the permanent solution to it. And that's the distinction. So it's like you either don't get Bitcoin and the volatility will destroy you. You'll think that you're hedging inflation because someone said it's a hedge to inflation, but a bunch of entities fail and it impacted Bitcoin zero, but there was price volatility and you sold Bitcoin at 16K. Or you thought you were hedging inflation, so you had a 1% Bitcoin position and it was sitting at FTX, and Bitcoin went from 1K to 28K. Bitcoin didn't store purchasing power because you no longer have your Bitcoin. You weren't equipped with the right knowledge. And then from the point where it clicks, where you start to order it as money, again, at that point, it can't be in focus, but the path to getting there, in my view, in every case that I've ever experienced in dealing with other people, is inevitable. Like it's a one-way track, and it's a fairly quick one. It's not like a tomorrow thing, but it's like a half a year and a half, that you start to see the problems that, and one of the other ways I describe it is like, you can't see the problems of the fiat system until you understand Bitcoin. And so once you get to that point of clicking, it's like, maybe real estate could hedge dollar inflation, maybe quote equities. They really can't, but people use them as a quote hedge to inflation. Maybe gold is a hedge to inflation, but all those people who trade gold, they just want to get more dollars. Bitcoin's the actual solution where you start to say, I'm not storing my wealth in Bitcoin just to get more dollars to offset dollar inflation. I have been able to rationally explain to myself why in the future that Bitcoin is going to pay for gas directly, going to pay for a Real Bedford game, food at the grocery store, healthcare, and that, I like to like simplify it and say, new car can solve the problem of a broken car. New roof can solve the problem of a damaged roof. Only a better form of money can solve the problem of a broken form of money. And so if you are out there explaining, because again, like the number of times I've heard this, I thought Bitcoin was supposed to be a hedge to inflation and it's going down while inflation is going up. It's that no, it's actually the solution to inflation. Bitcoin adoption happens as knowledge distributes, because if you're at the grocery store and you know nothing about Bitcoin, again, coming back to that prior discussion, if you know nothing about Bitcoin and the cost of your beef costs 50% more today than it did 3 years ago, and you have no idea how Bitcoin relates to that problem, you're not in a position to quote hedge inflation. So it's that if you have very limited knowledge, it's likely going to cause you pain and heartache. And that once you acquire the knowledge, you realize, no, this is the only viable thing that permanently solves it. And it's a monetary phenomenon of central banks creating it, and they're destroying the money. And I need to save in this. And there's a big difference between trading Bitcoin to get more dollars and saving in Bitcoin because it's the future money that you're going to have to eat and survive.
What about if you're in a country like Argentina, when the price of Bitcoin's going down in dollar terms, but it's going up in pesos? So I kind of feel like sometimes maybe if you're in Argentina, when you're buying Bitcoin, you kind of are also buying dollars in a way, in that you're buying the fact that Bitcoin is primarily traded against the dollar rate. This primary exchange rate is the dollar. And so, yeah, you could be when you're holding Bitcoin in Argentina and the peso is inflating at an ever increasing rate, you are hedging your local inflation there. And I've seen it. So I've seen it whereby people, they will hold the Bitcoin and each week just be selling it so they can have their pesos.
Yeah. And
that is a hedge there.
Well, I think that, again, if they have not figured out why Bitcoin will store purchasing power over time, they, amidst Bitcoin volatility, they might sell it for pesos at the wrong time. So I think the same thing applies.
It's more of a necessity though there. People have a necessity for it.
But it's the same problem, right? Like Bitcoin's volatile and inflation in the US is increasing. That's reducing the purchasing power of all of my dollars in my bank account. It's the same problem as someone in Argentina of the currency side of it. And so if they're saving in Bitcoin and saying, I'm going to convert back out to the fiat currency at the time that I need it, again, I don't view that as, they're not hedging inflation. If they've gotten to the point that they understand why Bitcoin is storing its purchasing power. And so again, it's not to be pedantic. It's just that on the knowledge spectrum, if you're in Argentina and you're dealing with Argentine pesos, one, there's a probable reality that you don't have access to dollars. And so Bitcoin is the thing between Bitcoin and Argentine pesos that's going to maintain purchasing power. But if you're a crypto bro trading Bitcoin in Argentina, and there's going to be a period where it crashes in Argentine pesos, and you sell it, didn't serve as a hedge to you, even if Bitcoin stored value over a longer period of time. And so realistically, though, if you're an Argentine and you figured out why Bitcoin will store value much better than your country that prints money faster than virtually any other country in the world, then you're going to save in Bitcoin and you're only going to re-access the rails of the old system. So I think it's the same problem. I think that it keys in on, though, that places that are actively going through more pernicious hyperinflation in present day, it's also harder to adopt Bitcoin. So it doesn't make light of the fact that when things are economically less stable, your ability to sit in a comfortable place with reliable power and clean water and knowing that you have more security, you can sit around and think about all these questions a lot longer and harder, more consciously, if you're trying to figure out, what am I going to do in a week, or how am I going to get a meal tomorrow? Like, it's functionally harder to adopt Bitcoin. But I think the context of this question of can Bitcoin hedge inflation is if you don't get it, if you don't have an intuitive understanding, because it's still volatile in the Argentine peso, there's just a much more clear market signal that the other currency doesn't work. And that's also what we discussed in our last podcast, which is where I think hyper-Bitcoinization, it doesn't happen until a developed country hyperinflates. That when people are forced into Bitcoin because it's the only thing working, they act more instinctively than they do conscious or sitting down and working through the mental problem. If you have a clear and present danger because the currency is losing 10% a day, it's well, what else are you going to do? It's not, in my mind, hedging inflation. It's protecting all of your life savings.
And to be honest, even in Argentina, the majority of people I met when I was there, they still wanted dollars. Even people who understood Bitcoin still wanted dollars.
Right. Because if you're in that world, hyperinflation of a currency is a bad outcome. And I think this is probably one area where Bitcoiners don't think as much about the problem. Like if someone says like, oh, Bitcoin's going to be worth $1 million, $5 million, $10 million. It's like, well, the dollar is going to hyperinflate. And I'm not in the business of predicting when. I just build the rational, logical case as to why something's going to happen in the future. And I need to survive all weathers. Well, if Bitcoin is worth $10 million, the dollar's hyperinflating, and that means the US economy, like wealth is destroyed when currencies hyperinflate. There will be some economic disruption. People think we're just going to keep going up if I have Bitcoin. It's like, no, your quality of life might go down. You might have to sell more Bitcoin than you think you are because you're going to need to eat and access healthcare that becomes more scarce, right? So I think that in a scenario where the active hyperinflation event is happening, having the currency that can most immediately solve your near-term needs is very rational, right? It just so happens that that's the next best thing, and that currency that they're opting into also is going to have those same problems a few years down, further down the line.
In this world of hyper-Bitcoinization, remind me, but I'm of the belief that you don't think it replaces all sovereign currencies. You still believe we'll have them, right?
No, I believe that it replaces it.
Oh, you do?
Now, sovereign countries will logically try to say, hey, here's some Bitcoin, and I'm going to peg my sovereign currency to the Bitcoin. But
eventually they won't.
There's no rational reason to be like, well, I'll just take the Bitcoin. Or if you don't allow me to be in your country to have the Bitcoin and you only allow me to have your fiat-backed or Bitcoin-backed fiat currency, like I'll go to a different country. So I don't think that they can coexist. It's like, and part of that's based on my two-sided equation. And this is kind of getting my origin story to Bitcoin. I figured out why the Fed was always going to have to print more money, like always. Increasing, accelerating, however you want to think about it, function of time. It's a problem of debt, and Bitcoin solves that problem. But the reason why the world is gravitating to Bitcoin is its fixed supply, and there's this fundamental economic driver fact, however you want to describe it, that economies converge on a single form of money. So if there's this thing out there that has a fixed supply, a form of money that can't be printed, everyone's going to converge on that because they need to trade together. It's an intersubjective problem. So if money converges, or if economic systems converge on a single form of money, and there's a permissionless form of money that can't be printed that's accessible to the entire world, it makes a whole lot of sense for everyone to adopt it. So I am of the opinion that not because I want the US dollar to fail, I actually think that it would be better for all of us if it's extended further out in the future. I think that there are just a lot of signs written on the wall in the banking system, all over, the Fed, all over the Treasury, all over every central bank in the world, that says the situation where we're at now is more precarious. And I can't envision it becoming less precarious because they're going to have to print more money than they ever had before.
Well, they're printing about what they printed in 2008 to rescue the economy about every month now.
I mean, I think what you're talking about is like right now, I think the U.S. federal government's running between a $2 and $3 trillion deficit. The Fed is actually in the process of trying to withdraw
tightening
cash from the banking system to rein in inflation. That ultimately ends in a liquidity crisis, which creates a credit event, which then induces the Fed to create all the more base money that then allows the expansion of credit to grow even faster. So I think it's just speaking at the level of a different size. It's like there's more credit being created because the federal government's so indebted, but the Fed's kind of working in opposition, which is squeezing somebody. And that ultimately the same thing happened, in the next months, certainly probably not longer than a year, that just as the Fed ran into a buzzsaw in 2019, that ultimately led into 2020 and $5 trillion being printed over 2 years. The same setup is there.
But much more will need to be printed.
But much more will need to be printed because from that point to today, the credit system, speaking just in the US, has increased by over 20 trillion. So there's more debt that needs to be supported. And the only way that it can be supported is by printing ever more money.
Is there a fair argument that Bitcoin is a hedge to monetary inflation, just not consumer price inflation?
I mean, I think I'm just speaking at a different level, and I really tested myself before I put this presentation out, and I put an article out before that to say, am I being pedantic? And so I think that if you figure out Bitcoin, it can functionally help offset better than any other thing the collapse of the fiat monetary system that is most immediately signaled by the rise in price inflation of goods. But if something has clicked for you about Bitcoin, like there's no way that anybody holds 99, like, you know, if I don't want to forecast how much your savings are in Bitcoin on the personal side, but mine's more than 95%.
Same.
Like
Same.
You don't hedge. You know, like if there's a class of people in the world that have seen this as a solution and that it continues to enforce this fixed supply, that nothing about that will change, like how do you explain that behavior, right? And so there's a lot of things that that offset inflation. There's only one thing that solves it. And so to call the same thing that solves it in the bucket, it's like, yes, it's offsetting inflation. Yes, it's protecting purchasing power, but it's also, you don't have to get out of that thing back into it at the end of the day. Like, that's like,
I get it.
Real estate, not, you know, baseball cards, not fine art. You actually need a form of money to solve your problem. And that's what Bitcoin is at a fundamental level. So it can offset the inflation, but it's doing a whole lot more than that. And it's difficult to stay in that in-between state once it's clicked to not get to the point of seeing that, like, oh, this is actually the permanent solution.
And it's a stronger message to say to people.
Yeah.
You don't need a hedge. You need the solution.
Yeah. And it doesn't set people up falsely, because in their mind, what a hedge to inflation is something that offsets inflation. Bitcoin's not correlated to the dollar, right? So, as there's dollar inflation, maybe, and I don't even, I try not to think about the fiat world a lot, but like maybe there's a more direct correlation to gold setting off, 4%, dollar inflation, or maybe real estate does that. I haven't done the analysis, but those things are correlated with the dollar. And if you've been told a story that Bitcoin, quote, hedges inflation, and you're sitting there and you're going on that and you're seeing inflation in Bitcoin 69K and you buy it, and then boom, it goes to 16. You're like, wait, what? This was supposed to be a hedge to inflation. It's like, no, it wasn't. It was the solution. And again, Bitcoin adoption happens as knowledge distributes, and knowledge distributes as a function of time. So if you buy it under the wrong context, then you can't explain all of this volatility. But if you started to figure out the 21 million fixed supply, you start to figure out how that translates to, hey, if a bunch of people adopt Bitcoin, and I think about this, if Bitcoin adoption is going to increase by 10x, and that will happen, in my opinion, for sure. Clearly, 1,000x, whatever, everybody in the world is going to adopt it. But let's just use the, kind of explaining this why it's not a hedge. One person owns Bitcoin. If we increase by 10x, that means 9 out of every 10 people is pricing Bitcoin for the first time. They're in a information disadvantaged position. The first time that you bought Bitcoin, for me at least, it felt like I was setting money on fire. Over time, over time it became intuitive. But think about some high distribution of 9 out of 10 people buying Bitcoin for the first time, feeling like they're setting money on fire. The Bitcoin price is going up a lot. They're feeling good about themselves. Starts to go down. They're starting to panic. And so that is not acting like what people, if language is important, a hedge to inflation is something that's highly correlated to dollar inflation. Bitcoin is not that. For the reason that it's actually solving the problem, and for the reason that the way it's adopted inherently drives volatility, and that volatility are the precise times that demonstrate that it's not correlated to dollar inflation. And so kind of at the fundamental level, it is that it solves it. But then on the other side of it, because again, and this is my own, existence in the market, the most common single question that I got was, I was told this was a hedge to inflation and it's going down. And it's like that point of, well, if you didn't know that this was the solution to inflation, then when inflation started happening, you would have already been in Bitcoin prior to that point. You wouldn't be reacting to it. You might be incrementally, kind of growing your conviction in it, but it would have already had to click that you can't pair knowledge you don't have with the data point in the real economy. And so because I was witnessing this over and over, the most common question saying, but people said X. And I was like, I never said X. I'll explain it to you the real way. And then I'll help explain the world around you, and you can make sense of the volatility such that you don't sell Bitcoin at the right time, because it is actually solving the problem of inflation. It's just not your definition of what a hedge to inflation is.
I'm with you, Parker. You there?
For sure.
Yeah. I'm never saying it's a hedge ever again. It's only ever the solution.
But I got an article out there.
All right. Fuck off.
It's time to pay your
All
debt.
right, hold on. I don't know if I've got enough in my life.
Oh, can you actually view the invoice though?
Yeah.
All right. There's context here. I made a bet with Parker.
Okay, but you got to read. You got to read the invoice. I sent you an invoice on Zaprite. It's technically due in 10 days, but I'd like to collect payment right now. It's billed to Peter McCormick from Graduate and Suddenly LLC. It's for no Cash App shitcoins. And the bet was for 18 months. Cash App did not add shitcoins. I had faith in Jack Dorsey as a Bitcoiner.
I had faith in Jack, but I just thought they would add Ethereum.
Yeah.
And I was wrong. I lost the bet. I'm going to have to pay this on chain though.
Okay.
You can do that.
Yeah. So go to pay invoice.
All right. Well, I'm going to need my laptop.
Oh, do you want me to just do it?
I'll just pay you back.
Yeah.
You can pay it. I'm going to challenge your Nostr thing.
Okay, wait. Let me just explain this. So just so you know how this works. So when he clicks Bitcoin, an address is going to be generated directly for my wallet. So that's going directly to my cold storage. It's not coming through Zaprite. And then if he had hit Lightning, that technically would have gone to my, that's my Strike account for Graduate and Suddenly. But yeah, so you can just capture this, pay the man.
I was going to try and do it on Nunchuck. I was going to try and show you the tap signing, because I bet you've not seen that, but I don't have enough in that wallet. Here you go, I'll do it in this one.
Well, Danny showed me a very cool Nostr / Bitcoin integration that's increased my conviction on the importance of Nostr.
Okay, what is it?
It's a Mutiny wallet.
Oh, the Mutiny guys, they work out of the Bitcoin Commons, work just...
Love Tony.
Yeah, love Tony, Ben, Paul. They live, they work the table over from me, so we have these conversations.
The integration they've put into the Mutiny wallet, whereby you can just straight up pay people who you follow in Nostr, I think is fucking brilliant.
So, like
when I have a bet with Danny now, he doesn't need to send me an invoice or whatever. I can just go straight into Mutiny and just click Danny and pay him. That's cool.
Yeah, but that could also be that doesn't need Nostr.
What would it use instead?
Well, think about this application here. None of this money is routing through Zaprite as an entity.
Yeah.
So any application, whether it's Nostr, whether it's Twitter, you could go, if Twitter built Lightning into it, you could just go to somebody's Twitter handle and pay them in Lightning. That's a Lightning innovation.
But what if Twitter goes down?
What if a Nostr relay goes down?
There's other relays though.
Right, but there's other companies offering solutions to their Zaprite. So basically a relay is a central point of failure. So if you have my issue with Nostr is I don't, from an economic incentive perspective, I do not believe that it's censorship resistant. That's number one. I think that it actually does Bitcoin a disservice to compare Bitcoin censorship resistance with Nostr. I think it's making the same error that a lot of shitcoins do about decentralization. Saying, "Oh, I've got this decentralized currency," and it's like, "Well, how did I just get rugged?" And then the third thing is, I think it's a distraction from Bitcoin.
How does Nostr rug me?
What's that?
How does Nostr rug me?
No. My point is that when people say, I have this decentralized currency called Ethereum and it's better than Bitcoin, it's like, well, that's centralized. And you're using the term decentralization trivially. You're trying to equate it to Bitcoin's decentralization. There's no world in which the centralization of something like the dollar or Ethereum could ever be compared with the decentralization of Bitcoin. So what a lot of Bitcoiners who would say 100% people say that things are decentralized in this fiat cryptocurrency world, and they're not decentralized. They're trivializing the word decentralization, and decentralization is not trivial. So
I don't agree.
So no, I see this all the time.
Not with Nostr.
From people that I respect.
Yeah.
I'm not gonna call people out.
Yeah.
You're calling them out without saying
Yeah.
their name. I know who you're talking
I know
about.
what you're talking about.
But they say Nostr is censorship resistant.
So why do you think it isn't?
And Bitcoin is censorship resistant. Nostr in no way could be confused as being censorship resistant like Bitcoin is.
No, it's not. Yes, it's not the same. But
The thing that would have to be true for something like Nostr to be censorship resistant. And again, I think there's a similar parallel where the only thing that I see out there, and like I talked to the guys at Mutiny, so I know there's some other things maybe on the hood. I'm not convinced that they can't actually just be in an application, that they don't actually need Nostr, but or they couldn't be incorporated. Is that that the only thing I see is social apps, and that
there's more coming. So
I know-
we've seen e-commerce.
There's marketplaces being
I
built.
know. I hear that, but like that's just Bitcoin. There's this network of nodes that are actually, decentralized. I'll believe it when I see it, because of like when all these people promise these things on crypto, is like the only things were like trusted finance apps. It was just finance. It was like nothing, And so it's like, hey, like this is a messaging protocol. Bitcoin's a messaging protocol. Bitcoin's a messaging protocol to move money. Anything that's not moving money or Bitcoin, I just view it as like maybe the people who are working on Twitter should work on that are infatuated about social apps should work on Nostr. And
you think the people working on Nostr should be working on Bitcoin?
I think the Bitcoiners that got infatuated with Nostr over the last 12 months, I see it creating like tangible distraction. And that's fine. That's, they're free to do that. And it's not like a moral thing. I'm just saying like, hey, me logically, I think Bitcoin's the most important thing to put all my energy in. And if I'm out there thinking about how to get a dentist paid in Bitcoin or a rancher paid in Bitcoin, figure out how to get the gas station to receive Bitcoin as payment. Again, it's not to try to quote drive the circular economy. The other thing from my article I don't want to be confused with is like, it's just each individual's business decision to be like, it's on you. If you're a Bitcoiner and you own a business, it's singular. Only you can decide whether you receive Bitcoin, but saying it's probably more important and don't be complacent, that none of that requires Nostr.
But okay, yes, Nostr doesn't have the same.
The thing that the Mutiny guys, I believe what you might be keen on is like Nostr Wallet Connect. It's like, is there a better way to, broadcast transactions and to help uptime of Lightning wallets? But like, again, that I look at and says like, hey, you need, the problem is the uptime of the Lightning wallet.
Work on that.
Work on that. So I just like, it's like Bitcoin is moving to not be like esoteric, because I try to be hyper rational, but like if you think about it from a building block, it's like Bitcoin's moving monetary data. Anything that's not moving monetary data is moving non-monetary data. Bitcoin moves on the Bitcoin network. And if you're telling me that Bitcoin can only move a certain way because it needs something that isn't in Bitcoin,
No, I'm not saying that.
No, I know you're not saying that, but that's where these things of like Nostr helps solve X problem for Bitcoin.
No,
It's like,
what I'm saying is that Bitcoin is decentralized money, censorship-resistant money. I'm saying Nostr is more decentralized than Twitter and more censorship-resistant than Twitter. I can't be kicked off Nostr. Okay,
And
you can't be kicked off Nostr, but you can be kicked off Damus, and
how
they shut your account down.
is that true?
Yeah, but it doesn't matter.
They're
Like,
going to get Primal.
Then you go get Primal. It's the same thing of being like, well, I'm on Twitter. I'll go to True Social.
I don't think Damus could kick you off. They could just kick you off there. Relay.
No, what they can do is they can stop routing traffic because they again. This is why it's
Okay,
but my point is, hold on.
No, but that's in opposition to my point. My point is it's more decentralized than Twitter.
Okay, but it's not censorship resistant.
It's more censorship resistant than Twitter.
Okay,
Because I can have
but this is the I wrote about this one article. I actually took it out of the book. I said, being a little bit censorship resistant, you can't be a little bit censorship resistant just like you can't be a little bit pregnant. So
I can be censored on Bitcoin.
What's that?
I can have transactions censored on Bitcoin. Miners can censor me.
Send a Bitcoin transaction.
I'm just saying they could.
The reason
theoretically,
but they can't practically, and that's the point. So because then this is how most of these people who are using Nostr are doing it. They're getting information passed through a server, which inherently is censorable, and delivered to them. And yeah, you could get cut off, but then you don't have access to any of your data, any of your contacts. You got to, or maybe you do.
Yeah, you still keep. But
you keep the contacts. But like my point is just like.
My view is it's a better scenario.
My view of this is the only thing that would make sense is if there's an economic case for you to pay 8 relays at the same time for a social app.
Okay, let me put it differently. What I'm saying is I've got more optionality that with the existence of Nostr than I have with just Twitter. And I have less scenarios where I'm going to be censored than I do with just Twitter. And the Mutiny wallet is a really cool way to pay people.
I love the Mutiny wallet to pay people. I've got a Mutiny wallet. Yeah. I've got sats there.
Yeah.
Okay. And I love Tony, Ben, and Paul. This has nothing to do with it. This has to do with Nostr. So if I want to use a Mutiny wallet to pay someone in Bitcoin, I'll pay you in Bitcoin with Nostr. With the Mutiny wallet, and that doesn't really need Nostr. So
no, it doesn't need it, but it makes it easier.
I think we're missing a big part of it though. Like the world is chronically addicted to social media, and especially with like what Twitter are doing, it's going to be basically a private CBDC within 12 months from what Elon Musk has said. And if we can get people onto Nostr, it's surely a better option. And also, if we might end up flipping it where Nostr actually onboards people to Bitcoin, not the other way around.
I don't think so. So I think that there's no way until a hyperinflation event happens and it's clear and present danger for you, like you have to have done some conscious thought about Bitcoin. Like people have told me, people get brought in by gaming and like all this stuff. It's like, no, you have to like think about your savings and work and value. There's no way around that. Like a data point marginally can have an impact. And that, again, like I view this as like, again, I'll use an example, but it doesn't mean to be biblical, but it's like there's a flood coming, like flood, huge problem, consequential, money breaking, massive. We don't know where things are going to shake out. The most important thing to be working on is fixing the money. So again, and that's also not like that's a me being hyper logical and rational. And I see other people that I know get Bitcoin, and I look at it and I'm like, any hour that they're working on Nostr, they're not working on Bitcoin. And this is like not a crypto bro, we're trading Bitcoin to get more dollars thing. It's like, we got to fix this because we got one chance. And if 100% of your energy isn't going into the Bitcoin thing you're working on, then it's diluting it. And there's not enough people as it is working on Bitcoin. And so if you're one of those people that has that precious knowledge and the capability to be more focused and to be more, because the other thing is that I think that Nostr has nothing to do with free speech. As you've learned, like free speech is a legal standard, not an app standard. I've been in a lawsuit that similarly, we said true things. It was a fraudulent company, and those people were convicted. That lawsuit went on for 5 years. That
I'm in my 5th fucking year.
That the ability to say things and not be criminalized or prosecuted or sued, like that's what free speech is about. And it's not adjudicated on censorship of social apps.
No, I agree with that.
I agree.
Okay,
So a
listen.
good way to communicate. And then the last thing I'll say is, I think that Bitcoin is the most important thing to advance in the world. So part of it is the time standpoint, but then on my side, it's like I'm actively shadow banned on Twitter, confident in that. But I am there to reach people that don't yet understand Bitcoin. And the other reality is that Nostr is, probably a high overlap between people that get Bitcoin and people that get Nostr. So it's like, if I'm trying to reach an audience to educate them about something that they don't know, being in a place where they're more likely to be makes more sense.
I understand your argument where people should be focusing their time. I still like Nostr. I think the world's a better place because we have it. And I think the integration with Mutiny is very cool. And it's going to make me use Mutiny. It's going to make Mutiny my primary Lightning wallet now, personally.
Yeah, but if we
because of the Nostr integration.
But if we could connect Mutiny to Zaprite,
get Tony on it.
But
it's the social connections. But anyway, listen, look, Parker.
Paid.
Yeah.
Oh, wait, go back. So
I owe you...
$1 million sats.
Well, you're more than that now. Oh, no, you might owe me in a few days.
Yeah.
Right. Gradually and then suddenly the book is coming out when?
it's at the printers. So
all right, keep an eye on that.
There's a queue, so next week or two.
Zaprite, where do people check that out?
Zaprite.com, Zaprite. I like to say, that like Drake meme where people are like, Zap, and it's like, and then it's like Zaprite.
Okay.
So Zaprite, focus not on getting, fractions of pennies for your tweets, focus on getting paid for, the hard work that you do day to day.
And go and check out all the other shows I made with Parker because they're all fucking brilliant.
Yeah, and then that Bitcoin is not a hedge presentation. It's on YouTube. I also wrote an article for people that want to read better than YouTube. It's on my blog, gradually-then-suddenly.xyz.
Excellent. Parker, amazing. Thank you. I'm always learning from you, man. I really appreciate everything you do.
All right, well, come check out the football club sometime soon too. Appreciate it.
April.
I think that conflicts with BitBlock Boom, but we'll get a special trip.
It does. Yeah, it does.
I want to come see,
Yeah.
get on the ground there.
You're one of the people who has to prioritize Gary, and I get that. Okay, man. Anyway, listen, good luck with everything. We will pump everything you've done recently out on the show, and just keep crushing.
Appreciate it. Thanks, Danny.
Thank you.